boy, do I have a video for you coming up. We are going to talk about the weekend trap being Monday. As always, we always start with an understanding of what happened over the weekend, who got hurt in the false move week beginning, and of course, when is that false move week beginning going to be over so that we can move into our 3-day swing. So if you're new here, welcome. If you're returning, welcome back. Big shout out to the TTC tribe. As always, just note that if this is your first time watching this channel, a lot of the language will be rather different to probably things that you've heard before. Don't worry too much about it. I try to break it down as much as I possibly can. Sometimes I go on tangents, but if you stick with it, you will start to understand this method in full sooner rather than later. Now guys, before we get into it, it's a coffee kind of day. Just to let you know, this price action stressed me out. I don't drink coffee, but we're doing it today. But it doesn't matter. We're going to talk about the lesson from what has happened so far and what may potentially happen next. So be sure to smash that like button, hit subscribe if you're not already subscribed, and turn that bell button to all so that you can be notified every time I upload a new video. Now, let's get into this price action. All right, looking at Bitcoin, we're going to go back through the weekend trap. We can see here, this is how we always start the week. We're looking to draw a box around the weekend consolidation from the time US closes on Friday, which we can see here from this indicator. By the way, this indicator, if you want it, that marks the session times down the bottom, it's simply called market session times. If you search that in the indicators, this one right here by 𝗟𝗶𝗿𝗃, it's a free indicator. You can add it to your chart, and that way you always know when the sessions are beginning and ending. So from Friday close of US, we draw a box around the weekend consolidation until Sunday 5 p.m. New York when the market opens. The market opens with a dead gap zone. That is the zone before the actual sessions start, and it's a highly manipulated zone. Not ideal or not really recommended to try and trade the dead gap zone because it is unpredictable. We're going to talk about that. But from there, we move into Asia, UK, and US, and usually at the session changeovers is when we will get our ideal entry on trades. So if we have a look at this here, when we draw our weekend box and we're drawing it to the most of the candle closes throughout the weekend up until this period here, which is about 6 hours before the dead gap zone starts, and we draw it to the candle close bottoms as well. Once you have that, it's very easy to identify which way they spiked price in order to stop out whoever has been trapped over the weekend or trigger pending orders that may be waiting in the book. So we can see here on this very small wick here, this green hammer, that was the first attempt there because that broke the support and then price just closed right back up within it. What that did was stop out long positions because anyone who went long during the weekend would have their stop loss just under this support, feeling like that's a good spot to put your stop loss and you're safe. But of course, one little wick and it takes you out. So the longs got stopped out there, but people who have sell stops, they would say, if it broke support, I want to go short, put my stop loss somewhere within the range. That wick also triggered the short, and then they swiftly move price the other way and it stops them out on the other side or liquidates them if they don't have stop losses at all and they're trading high leverage. That's why we don't trade high leverage, because the 50x, the 100x traders, they're always the first target of the market maker. It's just too easy to take them out because your liquidation level is so close to your entry price. Moving on. So we know that this week here stopped out longs and it trapped short traders. Price swiftly moved to the upside and it basically did the damage, the exact same story the other way. We almost repeat this on every Monday's video. This move here would have triggered any pending long orders, trapped them, and then price moved down to the downside and liquidated those. Now you might be asking, okay, well, if the trap move was done on that move down, why did we come back up here and create a higher high? This week wasn't all that typical, and I'm going to explain to you why, because it's a very, very important lesson that comes back to the retail patterns that most of us traders would be drawing. So if I go out to the 4-hour time frame and we simply connect the candles here, now what you can see here, before that breakout last night, we were in a symmetrical triangle, and a symmetrical triangle is a continuation pattern. So when it's coming from a trend to the downside, downside, if it's a continuation pattern, the triangle should break out to the downside. And so what happens is sometimes people who feel unsure or they're learning to trade still or whatever it is, they will go and put a sell stop just underneath the support line of the triangle, so that if it does break down, say whilst you're not watching or you're in bed or whatever, it catches your entry and then you are hoping that it continues down further. They can also do that the other way. So they will place a buy stop just above the triangle resistance line to catch the breakout, just in case this time it changes trend and breaks to the upside. The problem with this is that this triangle formed on a weekend. So especially the fact that it came into the pointy end of that triangle on the weekend, it just set up for a double-sided trap. Now you can't really predict that ahead of time. We did predict the break to the downside, but until that break to the downside happens and you watch the recovery after, you can't really know it's then going to go for the top side. But in this case is what it did. So now that you know that this 4-hour triangle is here, if we go back down to the 15-minute time frame, now the trap becomes very clear, because you can see here that that is exactly what they did. This is the triangle support line here. They broke it to the downside to trigger those short orders. Then they swiftly moved it to the upside and triggered the long orders to break out to the upside of the triangle. And now we're just doing nothing, which is what Asia does. So that's fine. UK has just started, which we'll talk about in a second. But now you see why in this particular case, in this week, we did get a double-sided stop hunt false move week beginning. And that's simply because too many retail traders were banking on that triangle break. So lesson to you, you've got to remember the pattern, the levels, the timing. The timing is the key here, because that triangle break was set up for you on purpose to squeeze into the corner on the weekend when only retail is trading, because the market maker's not around. So now that we've got that out of the way, the question becomes, what way is our actual 3-day swing going to be? Because anyone who went short in this week here, high leverage traders would already be stopped or liquidated on this move to the upside. Potentially the 50x, maybe not yet. They might be safe for the moment. 25x would be safe. So, but they're in a drawdown, right? Anyone who went short at this level down here too late on the breakout, they're trapped and prices moved into the upside. What I do currently like about the current price action is the slow creep, because the fast move, which is what this one, it's a false move, right? So initially when I saw this move here as the fake move week beginning, that created our M formation, which is what happens after a false move week beginning. It follows it with an M or W, which broke to the downside. Now, if that didn't move fast, we had these two levels of liquidations identified as a target, and then the third one was the one down here at 28.7 to 28.8. So we got two of the targets. If that wasn't a fast move, which I would have preferred, honestly, but you get what you get, then we would have expected that this to be drop one, a slow retrace back to the 50 EMA, that drop one takes out this liquidation level, then we come for drop two to take out this liquidation level, a retest back to the 50 EMA, which would probably be somewhere around here by that time, and then continuation to the downside for the drop level 3. That is the setup that I was looking for before this move to the downside happened. However, remember, pattern timing levels, the timing of it wasn't good, because this drop happened before the dead gap zone started. Number one problem. And number two problem is it was too fast. So we didn't get the slow creep down that I would have liked, that would have then had us looking for a multi-session W over Asia UK or UK US. So that idea is scratched. This is finished now. And now what we actually have to see, because it was a fast move, are we flipping that? Is this actually going to be the start of our 3-day swing, where what it's actually done is create a W formation, because when price returned back into this trap trader zone, it hasn't closed within it. So it's created a higher low. We've broken this 50 EMA. It didn't break exactly, the vector didn't break the 50 EMA, but we did get a vector right after it, probably just pass in this case. And now we have a slow creep. So if the fast move is the fake one, then the slow move is the real trend. So far, this is actually looking okay for potential continuation to the upside from here for our 3-day swing or 3-level swing, whichever one comes first, to be to the upside. And here's the play for that. I would be okay if price broke the 50 EMA. That wouldn't be a problem. Currently, it's holding, so you have to keep that in mind as well. If you get a bullish engulfing, you'd probably just jump in on along. But if it does break the 50 EMA, because of where the 200 EMA is, which is the yellow one, which is in line with the bottom of this green vector here, I would be okay if we came back to retest that far, because then if you draw your fib level from the bottom to the top so far, price currently is still above the 38.2, which is really, really bullish. If we weren't to come any lower, that would actually be really bullish. So I actually would like to see us come down a little bit further, because all that this consolidation here is doing is recovering the imbalance that was created on this vector. So the more of it that it does, and as long as it doesn't close below it, the more of it that it does, the more it's rebalanced that zone, and then it's ready for the next shift to the upside. So that would make this the W formation, rise 1. We're currently in a retrace and we're looking for that rise 2 breakout to the upside. What would have changed my mind on that would have been if we got an M formation at the session changeover. Now UK is already almost an hour in at the time of filming this, and there's not an M formation that I really can see at this point in time. So I am looking hopefully to get a little bit more of a pullback. The 38 will line up with the 200 EMA. It will be not a full closure of this vector candle, but close enough. That kind of area is fine, but it really can come anywhere into this zone here of this green vector. And as long as it holds there and then gives you bullish candle confirmations in that zone, that's when you would get your trigger to actually enter. So at this point in time, this is just a setup idea. It's not a trigger to take any trade. It's a setup for something that we're watching for the right time for us to make our move. Now, what happens if that doesn't happen and price comes up instead, back into this zone, and then fails the zone and we head down? Because we're in the false move of the week, that is a possibility that we have to look at. At the end of the day, this has created a vector at the top of that move to the upside. So if price comes back here instead of back here, then all you're doing is, again, having a look at what the candles do and how they react when they get back inside that zone. Whether they get to the bottom of it, the middle of it, or the top of it, it doesn't matter. But if they start to look weak and bearish, if price got there, then that's where you would say that, okay, this is the false move week beginning and the week is going down. I don't really like that idea. I don't think that's the one that's going to happen, but it really is too early to be able to say. And I'm kind of hoping that UK just continues to creep its trend down, and then we potentially get that move out, you know, maybe around the end of UK at the UK extension time, which is 8 a.m. New York, or possibly into US. Let's see what the heat maps are showing us to see if I should have any other sort of different idea. I don't really have anything going on right now. These orders are still here down here at 28.5. We don't really have significant shorts above price. The price is really free to do whatever it wants at the moment. The best case scenario we've got is at 29.6, but it's at 919. It's not a huge one to worry about, but if price did go to 29.6, that is going to break through this area of interest, and it's going to come up for this liquidation up here at 29.627. So that could mean that they are preparing for this to be the retrace before rise 2 into the 29.6. So that's kind of what I'd be looking for, but I wouldn't act on it too early because we really are in a slow creep. When all of these candles are gray, that's the market maker sitting on his hands watching how retail react. And you can see here that we've got this rising open interest as well. So we've got price moving down in this consolidation. We've got rising open interest. We've got low volume. The market maker is not here right now. They're just watching to see what retail thinks of the move that just happened. So it's not time to act until you can anticipate the market maker is about to show up. And that is going to be if we can get further into this vector candle, in my opinion. Now, if anything else happens, it's going to be not in line with the model. So for me, if I don't get a bullish kind of structure out of this zone, that leads me to believe level 2 is about to come, then I'm just going to sit on my hands. I'm in a short from 31K anyway. That's a long-term short, so I don't really need to get short positions. But it kind of doesn't make sense if you follow the model and the rules strictly. It doesn't make sense that we would have a W formation, 1 rise, M formation, 1 drop. If that happens, the market maker has a different plan and we don't know what that is. So you're better off, in order to have a high win rate, when price is doing something that is outside of the model, you're better off doing nothing. That's how you increase your win rate, is by only trading when the price action is fitting within the rules of how you trade. So if I follow that, if I follow my own rules, because I can see a W, I can see this break as rise 1, I can see that we're in a retracement right now. If price comes into here and doesn't look bullish to me, then I'm not going to short it because it's against the rules, and I'll reset tomorrow. Knowing that today's false move Monday, the real trend, if it doesn't start today, the real 3-day swing, it will start tomorrow and we'll just catch it then. Now let's have a look at what news events we've got coming up this week, because they will lead to most likely the midweek reversal. Tomorrow we have ISM manufacturing and JOLTS job openings, and that's Tuesday 6 p.m. It's possible that whatever way the trend does go from today, that it continues into that news event. We'll reassess once we get there. I'll definitely be doing a video before we're there. On Wednesday, we've got ADP non-farm employment change. And then Thursday, we've got unemployment claims and ISM services PMI. So there's a fair few events there that could cause the midweek reversal. Even though we usually expect that on a Thursday, we're going to have to keep our eye open for Wednesday and even Friday if it doesn't happen then. But we'll take that day by day. We don't need to plan too far ahead. We just want to know what's coming up. But for now, our main focus should be counting our levels. Now, I want to talk about the Dixie, because the Dixie could throw things out. When we have a look at the Dixie on the 1 hour time frame, we can see here that we have a W formation. We have this rise here and we have a retrace here. And this here is rise 2. Now, the thing that kind of worries me about this rise 2, or not worries me, but makes me think that it might not be over, is it's not normal for price to finish where there isn't a vector candle. And if we look left from this peak here, there's no vector candles here. So it kind of doesn't make sense that price won't come up into these ones up here. So I'm waiting to see if that's what's going to happen and we're just in some kind of weird price action right now. Of course, if Dixie moves up, it's going to do one of two things to Bitcoin. If Dixie moves up, Bitcoin's either just going to go sideways and continue to consolidate, or Bitcoin comes down if Dixie goes up. So we'll keep an eye on that one as well. If it goes sideways, then Bitcoin's free to do what it feels like doing. So best case scenario, it continues to go sideways just so we can get those rises out the way. Now, before I get into Ethereum, just a side note, in case you're not aware, we have reopened our free Discord. We did close it for a while, but it's back open right now. All you need to do is look for the Discord link in the description of this video. Once you click on that, you'll be sent to this page. You can read the instructions on how to get your access. There are some instructions in there just to make sure that we don't have scammers rejoin, because that's the reason that we had to close it the last time. So we just want to make sure you're a real person and that we're really serving genuine people. So check that out if you're wanting to come, because I give my trade setups on YouTube, but in Discord, I'm holding your hand. I'm managing the trade with you. I'm letting you know when I think you should take some profit, or when I see another potential trade coming up, lots of things. If the market changes, which you got to understand when you're trading such a small time frame, things can change at a moment's notice, and you have to react to that, and you have to have the ability to be able to react fast sometimes. So sometimes something can happen in between my YouTube updates. It's best to be in that Discord so that you can be notified if something I've said I've now changed my mind on. All right, so let's take a look at Ethereum now. And Ethereum was actually a little bit of a better story, to be honest with you, which, look, I mean, I almost say that on every video. Ethereum follows this model a lot better usually than Bitcoin. So if you ever are trying to trade this model on Bitcoin and you're confused and you can't work out your counts, then have a look at Ethereum, because it will often give you a better idea. So with Ethereum, what happened was when we had that false move to the upside on Bitcoin, at the same time we got it on Ethereum, but Ethereum gave us a stopping volume candle right up here. And that set the trap. So once that trap is set, what you're waiting for as a trader of this method is to see after price pulls away from the trap, it's usually going to make a second attempt. It's that second attempt that you're looking for weakness. If price can't get right back into, at the very least, into the bottom of that vector candle, then it's likely that we're going to move further to the downside. And you can see on ETH here, after this drop down here, we had one attempt, didn't come back to stopping volume candle. Second attempt here, didn't come back to that candle. And so anything there would have been your trigger that this was not going to move to the upside yesterday, and there would have been the short down to take out these two liquidation levels, the lower one being at 1851. So that's done now. And then again, it just followed Bitcoin, but it didn't create a higher high like Bitcoin did. That's the only difference. But then again, it did give us the same W formation. And then this vector here did break the 50 EMA with volume. So that would count as rise one. And we're currently in the retrace. Is it possibly giving us another W right now? Yes, possibly. It possibly is. Let me just, sorry guys, I'm just remarking 50% area of the Asia line, which is up here at about 1869. So we want to see this get back above that in UK if we're going to move to the upside now. It's going to do it soon. I'm getting off so that this video can get out there and hopefully you guys can catch this trade, because if it breaks above that 50% of the Asia line, comes back to retest, if you're not already in a long position, that would be a good area to go long, providing it holds that area. Then your next obstacle is going to be, can it get back through this area of interest up here where the last traders were trapped? All right guys, if you've enjoyed this video, be sure to smash that like button, hit subscribe if you're not already subscribed, and turn that bell notification to all so you can be notified every time I do a new video. And finally, don't forget to check out the links in the description below. I've got exchanges on there for you to trade on no matter where you are in the world, and also grab the link for the Discord channel if you want to get my market updates more regularly. I will see you guys tomorrow.